following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. Join us now for the expert source for inside information on the options markets. It's time for Options Insider Radio with your host, Mark Longo.
Hi, everybody. Good to be in the last position here, so we are all that's keeping you from refreshments. So we'll do what we can to make that entertaining. I'm Gary Kreissman. I am the founder and head of Group PRM, which is a business that helps companies convert more of their prospects. I'm a marketer by background. I've been involved with the options business for many years in helping drive lead generation. I am, I guess with an asterisk, a co-founder of the Options Alliance, because I remember a day sitting out in front of the Board of Trade where Mark Longo and I were saying, hey, wouldn't it be cool if there was an organization to help options entrepreneurs? And he actually did something about it. So I'm impressed and I'm delighted to be here today. Josh?
My name is Josh Inglis. I have a public relations firm called Propeller. I got into the options industry originally back in 1991 when I joined Chicago Research and Trading, first as a runner and then as an arbitrage clerk. Brad Carmody in the back, where is he? Oh, there he is, right in the middle. He, small world, was a clerk there at the time before. He moved on to trading. I did not. I was decidedly mediocre at clerking. I moved out of that role into public relations and did public relations for largely the futures and options industry. Worked with exchanges, brokers, technology providers, hedge funds, associations, and most notably, perhaps to the group here, I ran public relations for Options Express for about 7.5 years from the agency side, from summer of 2001 all the way through number 10 in the Inc. 500, the IPO, hitting upwards of $2 billion in market cap at one point. Today, my firm focuses on startups and what I call startup-minded companies.
My name is Shean. I have a firm called 16 Wells that does outsourced marketing consulting, probably 80-85% for options and futures related firms of all sorts. It's been skewing a little bit more institutional in the last 6 months or so to a year. And prior to starting my firm, I ran marketing at TradeMonster, a retail broker, and was head of business development at Options Express for about 3 years ahead of that. And prior to that, a product manager for futures and options at E-Trade. My kind of background and everything, I didn't really intend to get into marketing per se. I did my MBA in finance at UFC, and I was kind of very financial and data-driven because of that, and then marketing kind of moved to where I was as opposed to the other way around. So I really bring a more data and numbers-oriented aspect to trying to make marketing work for companies big and small.
Thanks, Steve. One of the things that you'll see if you look at the commonality of our backgrounds here is we're all entrepreneurs. What we understand from a marketing standpoint as well as from a cash flow standpoint is the pain and the glory, I guess, of being able to build something, but the necessity to pay for something out of pocket. Generally, when you think about marketing in larger firms, when you're looking at advertising, branding, imagery, we're talking about expensive budgets, we're talking about long-term investments. when you're an entrepreneur, and as many of the folks who've been up here today have already stated, you got to think about your short-term cash flow. You know, can I generate enough revenue here to grow the business and still pay the rent? And so a lot of the orientation that we're going to bring to the table here is based upon that kind of thinking, where what we want to talk about are pragmatic ideas, tools you can put to use pretty quickly, techniques that don't require you to pay too much out of pocket, performance, things that are related to getting results from the investments that you make in marketing. And we're going to give you a number of different perspectives on that. Just in overview, what we've got is a series of questions that we will try to answer and that we'd like you to ask yourself as you think about how you want to market your business. And it really begins with revenue. If you say realistically, how much new revenue do I want to generate out of my business over the coming months or the next year? How high is growth? How fast do I want to grow? What am I willing to invest to do that? And a lot of this has to do with moving from the concept of being a one-on-one seller to using a range of media tools to do that kind of selling. But media tools don't necessarily need to be advertising. Obviously, so much in the digital world has enabled anybody as an entrepreneur to communicate with a broader group, witness hashtags. Witness the fact that a lot of you are here because of some kind of LinkedIn connection, social media, the use of AdWords or other search. All of these things are valid techniques. We will talk, though, about some specific strategies and models that can give you a much quicker return and actually lower your risk as you get involved in marketing going forward. It's important when you do any kind of marketing effort or you establish any kind of firm that you think about what differentiates you, what makes your firm, whether it's an advisory firm, an information firm, a brokerage firm, or anything else, what makes you distinctive, and frankly, who cares whether you are. When you say who cares, it means there's a natural constituency for what you do. There are some people who naturally will say, well, I need one of those. But for the most part, it's a question of how persuasive you can be in terms of being able to say to an individual who doesn't know you, who may not be searching for you, this is something we can do to benefit you. And it's important to be able to build that kind of differentiation, not only for your elevator pitch if you're raising money, but also in terms of communication. If you are doing social media, for example, what point of view do you want to represent? If you are trying to communicate to a prospective buyer, what is it that they're going to get by working with you that they wouldn't get elsewhere? Another important consideration is when you talk about how fast you want to grow, what is a new customer worth to? Because not all prospects, not all customers are created equal. A lot of businesses, when they're in early stages, just take business as it comes. Hey, I got a new customer. Hey, I got 5 new customers. Well, do you make money on those new customers? What defines your higher value prospects? Can you characterize them? Let's say in this industry, do you want somebody who's had experience trading options for years, and do you want somebody who's had good or bad experience? You could argue that somebody who's had bad experience is a more valuable prospect if you've got a good solution. Do you want to work at a high or low level of sophistication? Do you want to bring people along? Do you want people who want your information as part of an information portfolio, or do you want to serve all their needs? Once you start defining those characteristics, you can really craft marketing efforts that go after people who have those characteristics and focus your initial efforts and then your follow-up efforts on disproportionately on people who meet those needs, who have those criteria. I always describe the process as having two forms of return. ROI is what we all look at. But there's an unfortunate acronym, which is ROT, which is return on time. Are you spending your time going after the prospects that really make sense for your business, or the segments that make sense? Are you spending just as much effort to get an unprofitable new customer as you would to get a very profitable new customer? If you, in fact, put together the definition of what your prime customer is, your best customer is walking through the door, what does he or she look like? What's their experience? How much will they spend? What have they done? What problem can you solve? If you can define those things, it makes it much easier to find them because it affects the language you use. It affects the media that you use. And it will affect the kind of tools that you use. And these guys will tell you more about some of the specific tools. And finally, what is it that you want to tell those best prospects when you are trying to build a relationship with them? We would all love to have nothing but time to write brilliant tweets and blogs and upgrade our sites all the time. But it's possible to get outside content geared to the kinds of prospects that you want if you can get your messaging crafted and honed to the extent that you know who it is that you're trying to reach. So these are just some of the principles that we operate on. But what I'd like to do is give Skip and Josh the opportunity to tell you a bit about some of the more pragmatic things that can be done today to help you get some kind of return on the marketing investment that you're making.
Thank you. So my discussion will be about public relations and the role it can play for startups, new businesses. And before going into sort of the more of the tactical things, and as with other presentations, this will be kind of at a high 10,000 foot level. If anyone wants to reach out, josh@propeller.com, PROPLLR.com. We save money by using fewer vowels. That was a friend's comment right after I founded the company. That was nice. So public relations does two things for companies. Whereas buying advertising will get you lots of awareness, it won't get you credibility. Public relations gets you credibility and awareness. The credibility comes, and it's very similar to, if you're a restaurant, just putting the Tribune's 3-star review or 4 review in your window. It gives you the credibility that someone looked at what you were doing and thought it was worthy of writing about, of saying nice things about, of quoting you in a story relevant to you and your customers. It's just, and especially for a new company that's not an IBM, it's not a Chicago Board Options Exchange, it's not Wall Street Journal, or some other very well-known brand. That credibility is incredible. Is very important. It will also obviously build awareness, but credibility, I think, is really the number one driver, especially for startups, about why you should look at public relations. And the credibility comes because it's what's called third-party validation. It's someone else saying that you are good at what you do. One example would be, I think it was in Options Express's second full year of business. They were ranked #1 online broker by Barron's. That blew the doors off that company. After that, it was growing very quickly. But once they had that validation that Barron's said Options Express is the best, not the best options broker, the best online broker in the world, everything just exploded from that point. It's that validation of someone else saying it, not you saying we're the best, but someone else saying you're the best. Validation comes by, for example, what's going on here with the Options Alliance, Mark Longo. If someone's doing a story on how the options industry is looking for new opportunities as people move off the floor, and they talk to Mark Longo as the expert on this, that gives him validation as the expert. There are other people who might be able to comment on it, lots of people in this room. But whoever gets that quote, whoever's interviewed, or whoever's featured in that story is going to be seen as the authority. And in fact, whether they are the authority or not, you are the Mark, don't worry. And so that's like a bigger profile or feature. But even just individual quotes, if you're in trading education or you're trading advisory service, and you can be quoted in the Wall Street Journal or in Reuters or in Bloomberg or or in one of the trade publications or in a blog, that gives you credibility. Even if it's just a little quote, that shows that reporter, that outlet thought you were smart enough and worthy enough to be in there, so maybe your customer should trust you as well, or that prospect should trust you. And then public relations, I think, is great for startups also because it's the ultimate DIY marketing thing. I think it's difficult to do what Skip does. I think it's very difficult to do what Gary does on your own. Public relations does not require any sophisticated degree, training.
They let you do it after all.
Hey, I went to a Mac school. So it's very much something that anybody can do. And you don't need to hire someone. The two other alternatives, though, because sometimes people say, look, I just want to grow this business. I don't want to do public relations. I have some revenue or I have some capital to focus. The two approaches, one would be an agency like mine. Typically, the fees are a little higher, but the networks are bigger. We're going to come across more opportunities, perhaps, than the alternative, which would be a freelancer. Their fees are normally less, but they have smaller networks, maybe fewer opportunities that they bring to you because they don't see as many things. They don't have as many, there are a few of us who are always out there talking to reporters, so those reporters come to us and looking for things. It's just the power of numbers, really. We have 3 people, a freelancer would have 1, and a bigger agency would have even more than 3. So those are sort of the approaches, but it's very much a DIY kind of thing. And again, I'm very happy to help anybody. I was talking to Brad about this earlier. Just send me an email, again, josh@propeller.com, and I'm happy to give any free advice that I can. I just put together sort of a list of ways to get started, sort of a basic checklist. So like if you're going to start doing public relations, like these are some of the things I think that are helpful, and I'm happy to send these off to anyone who requests them. One, know your story. Gary started talking about it, differentiation, why you started the company. So I'm working with a client. I work with clients in a lot of different industries, and Sunday. Today's Tuesday. Jeez. It was Sunday night, actually. That's when this reporter wanted to do an interview. And my client has this amazing story behind how he started his company. And it goes back to the Stony Hook tragedy, and it's just this amazing, emotional, powerful story. Not everyone's going to have an amazing, emotional, powerful story, but everyone should have a story about why they started this. It's not, I stumbled into it, or even if that is the case, think of something more compelling than, I knew someone who did this, and they asked me to help out, and so I did this, and it's going pretty well. Find a way to show how your skills are incredibly necessary to your target audience, and how you live, sleep, and breathe what it is that you do. Have something to say and a point of view. When someone talks to you, have an opinion. Don't hedge by saying I think or I feel like or maybe. You're the expert. They're talking to you. Have that opinion, have that point of view, and they'll start coming back if they know that they're going to get strong. If reporters and editors will continually come back if they think they're going to get something strong. Another thing, social media. I don't know if we're going to talk too much about it today, but it can be a really great way. Not necessarily. We don't use social media to sort of build a huge prospect, thousands and thousands of followers, but it can be a very good way to build relationships with reporters. Almost all reporters are on Twitter. You should follow them, you should retweet them, you should send them information, you should ask them questions, you should involve them in your social media life. Use it as a way to get in front of them, and in a very informal way for them to get to know you and to like you. Fourth one is to read as much as possible. The Wall Street Journal, Bloomberg, Reuters, Market Watch, Trader Planet, blogs, website, watch CNBC. See all the stuff that's going on. That will help you find those opportunities as they arise, where maybe you read something, a reporter is writing something on an option strategy in Apple, and you completely disagree. You can normally find that email pretty easily. If you don't, let me know, I'll give it to you. You can reach out to that reporter and say, whoever you talk to got it wrong. I was going to say moron, but be nicer. Got it wrong. This is how it is. This is how I see it, and here's why. Reporters love that sort of stuff, and that's going to get them coming to you. Build yourself, as this goes on, build yourself a media distribution list. You should be writing a lot of stuff on your, and I'm going to get into content marketing just a little bit here also. But as you're creating stuff, as you're writing things for your website, as you're creating webinars and stuff, start sending that out to reporters so that they can see what you're thinking and what you're doing. Many reporters in the space, they're new to the space. Options is not an options in financial technology. I don't mean just be like, the financial education folks or the trading education types, but even financial technology or risk management consulting. A lot of these reporters, they're new to the space, and so the more information you can give them, the more education you can give them, the better. So build up that list of media contacts and use that and get in touch with them regularly and be a resource. And then the last is, if you do get something that's great, it's a quote in the Wall Street Journal or it's a feature, you contribute an article to Futures Magazine, don't just hope your prospect reads it then. You got to put it on your site, you got to put your logo on the site, put it in your email signature, tweet it out, put it in all your email communication, anything you have, promote. Don't assume that the day that it came out someone read it, because they probably did not. Then one other thing, I'll pass it over to Skip, and then he can keep us from the beer, is content marketing is a bigger and bigger part. We didn't really talk too much about it in planning, but it's becoming a bigger thing in public relations. And what all content marketing is, it started with blogs, but it's gotten bigger and bigger as a way to get your message out. And indeed, it's actually become a way, even though you're the one writing it and you may be posting it on your own site, it's actually, the more you show thoughtfulness on different topics, the more credible you become. So it can actually act, it's totally self-generated, you don't have the third-party credibility, but good content marketing can actually give you some of that same credibility that used to be exclusively to media relations. To do it, not everyone has a ton of time. Gary talked about that a little bit. But I think depending on what you're in, if you're in the trading advisory business, you better be writing all the time, like a beat writer for Bloomberg or Reuters or Dow Jones. If you're in financial technology or consulting, maybe it's not that often. But maybe you dive deeper and think, more, offer some more sophisticated analysis of what you're writing about. But I recommend that you pick a theme or themes so like someone knows, oh, hey, Brad Carmody, all he ever writes about is energy risk management. And maybe something even specific within that niche. So you're really known for something. Again, augment it with social, tweet it out, email it to people, put it in your email signature, use it over and over and over, and get as many people knowing about it as possible. And including using content management is also a good way to keep the relationship alive with reporters. So if you write something, find those, and if it's in energy, find those 5 energy risk management reporters and send it to them. Just as an FYI, you're not hitting them over the head with it. You're just saying, hey, I've read a lot of what you've written in the past. I thought you might be interested in this. Please call me with any questions. But over time, all these things you can do, all of this you can do yourself. And over time, it should help build relationships, increase credibility, increase awareness, and hopefully make you more successful.
I wasn't really planning on extending Josh's thoughts per se, but I think that it's worth taking that a couple of steps further from my perspective as a more pure marketer than PR too. Some of the things that I really like about...
But you can't spell pure without
PR. The things that's really terrific about content marketing in a lot of ways is if you're doing it right, you're doing what nearly everybody, when they're just spitballing at a cocktail party, is going to tell you you should be doing with any business, which is you should be writing about the issues, problems, and concerns that your customers or potential customers have. Okay? You don't want to be on your blog talking about how in version 7.1.2 we've got these great new features. I'm asleep already if you write that kind of thing. But if you're writing about what's the reason that you added these features to your new software, because the things that bring the prospects to you is either a problem that they are aware of or one that you highlight to bring to their attention that they weren't aware that they had. And the more you can discuss intelligently what it is that's going on in your prospective clients' lives and businesses and the financial issues that they're facing, the more trust you're going to have with them. And if there's one thing that I think the internet has completely screwed up for business in the world, it's truly that it has blown apart trust, because there's just so many, people out there doing it, in a scammy way. And if you can turn that back on its head, and before you start looking at your prospective customer and saying, I'd love to tell you what I do, it's a $20,000 fee first, you're not going to get very far. But if you're writing stuff on your blog, or you're writing stuff and syndicating it out to news organizations and things like that talk about the problems that your customers have, and they can kind of, in some small way, try you before they buy you, that's really going to help you extend that message further, and it's going to reinforce the rest of what you try to do that's more of a pure marketing advertising sort of role. So I definitely think that channel is a phenomenal one, regardless of the size of your company, and if you aren't doing it, your competitors are. And it can take any form. It can be written, it can be video, it can be audio, it can be a combination of all three. It's whatever you're most comfortable with is the way you should do it. And for some people, that really, it's easier for them to just talk into a microphone. Some people don't have a problem staring into a camera and speaking. Some people hate it. Whatever it is that's the way that you feel most comfortable is the way that you should do it. On to kind of more general marketing topics. I know that we've got a pretty wide spread of industries that are or pieces of the options and futures business that people are in. So I'm really, again, kind of keep this somewhat high level. I put a couple of slides together that really were just notes for myself. If you're interested in getting them, you can download them from bit.ly/alliance16. Or email me, skip@16wells.com, and I'll be happy to send you the link. But I was trying to think, when we were discussing what we wanted to bring on the panel here, sort of what the issues are that I see over and over again with clients, regardless of the piece of our business that they are in. And I think if there's one sort of common thread that I've noticed of, in particular, people who are former floor traders of one stripe or another, is people think that because they have a good idea and they've put it together well from whether it be a software perspective, or they've really thought through the curriculum or their education product, or they've thought about whatever it is that they're trying to do in so much detail, potentially over years, that will just sell itself. And I'm here to tell you today, the field of dreams, if we build it, they will come, is no marketing strategy. It's a great way to go out of business fast. For a lot of you guys that have been standing in the pit doing open outcry, you never had a customer. You never had to get a customer. The orders just came in, and you had to, process them, and that was really it. And then it was time to go to Cactus or wherever you went to, blow off the steam. As I think it was Dan that said it earlier, there's no beginning or end to your day anymore when you're an entrepreneur and you're trying to get your name out there. And if you aren't spending at least half of your effort figuring out how to get more people to know about what you're doing, somebody else had better be spending that time putting it into getting the word out there for what you're doing. Whether it be Josh doing PR or somebody that's putting your name out and getting your company known for what it's doing, or even you creating content, or just in some way, shape, or form, you cannot rely on the quality of your product or service to sell it for you. It will not happen. Okay? There's just too much noise in the world today. And that doesn't mean anything, that's not a commentary at all about your products or services. That's just saying people are really busy, they have no time, and they have very little tolerance for subtlety either. I'll just tell you right now. The institutional clients that I've been working with lately in particular, what I've found is that their technologies in some ways are 10, 15 years ahead of where retail trading technologies are in a lot of ways. They're just amazing, the stuff that they can build. They are at least that many years behind retail brokerage firms in their ability to get a customer. They're still sponsoring holes at golf outings and trying to get $10,000 trade show booths for 3 days to shake hands with people they've known for 15 or 20 years. You got to think about these things of, am I getting a real ROI? Am I getting a real ROT out of doing a trade show, for example, versus is there a better way to spend that time, those resources, that energy to get somebody who really is a qualified prospect to know who and what I do? To restate what Gary and Josh said about telling your story, you want to dwell on the things that make you different. It's very likely going to be something that's subtle. It might be very personality driven for who you are, what it was that made you decide to go off and start your business. As Josh said, I just fell into it is really not the best story you can tell. I know the quote is that history is written by the winners. I like to add onto that history is written by the winners, usually with lies. And that is, that's something that you want to be thinking of, even if it's after the fact. I mean, I think all of us in our late 20s, early 30s sat in a job interview somewhere and had to explain what we were thinking over the prior 10 years of getting jobs from one to the next place and explain that there really was a thought there and not just, well, they paid me $5,000 more or something like that, or, I lost this job because I, screwed something up horribly, so I went to this bank or whatever. You need to be crafting that story. And it's even more important as as this is your own thing, that you're whether you're hanging your own shingle out or you're working on some other product where you're an employee, you really need to take time to think about where do we fit in relative to the other choices that client might have. And that might be somebody who seems to be a direct competitor of yours. If you're a trading software firm, there might be another trading software firm. Or it might be that they aren't going to be using anything of the class that you're presenting to them. They might be going a completely different direction with a completely different service. Think about, a share of wallet sort of question. How do we compare against other things that people could choose to do? And I thought it would be a little bit useful for those of you who are, somewhat new or don't spend a lot of time doing marketing to just have a real quick high-level discussion of the different channels that you might use to get the word out there. And I'll kind of start with the most expensive and go to the least. And by the way, the most expensive is probably the flat easiest, and the least expensive is probably the most amount of time for the lowest return. It's a real good inverted curve. So, for those of you that have spent your life thinking of things in terms of bond yields, this should be really simple. For the rest of you, it'll be as confusing as it is for everybody else. First, you could start out with broadcast, TV, radio. When I was at Options Express, we used to say that broadcast is where you go when you don't know who your customer is, or if your customer is literally everybody. If you're Procter & Gamble and you're selling soap, and presumably everybody, let's hope, uses it, needs it, everything like that, broadcast can be great. If you are selling a niche product to a niche audience, broadcast is probably not the right vehicle for you. Display is what most people would call banner ads. You can get millions of them out there, and you'll have click-through rates that are not only below 1%, but fractions of 1%, hundredths of 1%. And that can be an effective model, but it tends to have a pretty high cost of acquisition. Email blasts, not to your own list, but going and renting somebody else's list can be an effective way to get the word out. Particularly if you take care and time to figure out, does that list owner talk to specifically the audience with the characteristics that you're trying to reach? There's a real art to that. He's the best in the business at it, flat out. Pay-per-click is one of those things in the business that has about 6 different acronyms to it. PPC, SEM, AdWords, Ad Center. There's a lot of different varieties of it, but the concept is always the same. It's a Dutch auction. It's just like a bond auction or something like that, where the first loser of the bid determines the price of that click. So if you go in for a Google ad that's for options trading or something like that, you might put in a bid of $45 for one click. But if the next person puts in a bid of $20, and they sort of your ad up, if somebody clicks it, it would be like $21 basically. You would just take the next click up from where the thing is. For people who have been doing pay-per-click for a long time, we describe entrepreneurs who try to do pay-per-click on their own as paying the Google tax. It is, in my mind, it is precisely the same as handing however much money you would put into your Google ad campaign to a kid who has never traded before and letting them walk right into the SPX pit and telling them to make money. It is about as likely to happen as it would be, on the floor. Not because you can't think of which words would be valuable to you, but because just like there is in the spooze pit, there is trading strategies, things that you want to do to control your cost, and that you want to think about what is going to happen after the click happens, and there's a real art to managing that. You can do well with very low budgets in that arena, but you want to be very careful, and you want somebody who's been through it before to guide you through it at least the first few times. But I mean, it's like anything else. You can spend the money on your own, do it yourself, learn things the hard way, kind of making mistakes and beating your head into the wall. Or you can pay some money to get somebody who already knows what they're doing to show you. And it's really up to you where you personally fall on that continuum. I always wanted to have somebody who already knew what they were doing show me. It was too type A to try to bang my head into the wall with it. I highly recommend that. But it certainly can be done any number of different ways. One of the things that's really interesting is the way that Google has been extending their products too. You can make it where that ad that gets displayed has a clickable phone number in it. If you really prefer and it's better for your business to get a phone call, you can target things where people can actually just with one touch call you. And it will be trackable, how many people clicked on the phone number and everything. They usually will route it through a different phone number that then bounces to you. That can really be an interesting way to get things done. Thinking through how to do that process is, again, really important. You could also do that just on mobile devices. I had a client who was, no joke, a mattress store. And their entire concept was to open stores down the block from the place that was slightly more expensive. They didn't bother with any site selection or anything like that. They just looked at where their competitor opened, and they would open down the street, put up a billboard, we're cheaper than those guys, and that was it. And I said, well, let's do the same strategy. We'll just make it that whenever anybody searches in this town on a phone for the other company's store, it'll put your phone number there. We'll beat them by $50. Click here, and they got all kinds of leads and business out of it. Now, bidding on competitor trademarks and things like that can be a real, thicket to get into. But there's a lot of creative ways to go at these kinds of things, and they can be very high return for you if you're willing to be patient and try things. Being very experimental with your marketing is something I recommend highly. The next thing down from a cost perspective and a little bit up from a work perspective is sort of the whole bucket of social media. And inside of social media, I'm including specifically buying advertising there too. I don't think it's particularly valuable to just be trying to get more likes, more follows, that kind of thing. Instead of quantity of engagement, you're really looking for quality. And it would be better to get 50 people to follow you on Twitter or like your Facebook page that are truly engaged with the content, that are reading it, clicking through things that are into it, than having 5,000 people jump on your page that have really no continuing interest in what you're doing. Where the advertising in social media is a little bit different. It is, generally speaking, on a pay-per-click basis, the same as Google AdWords is, but where the clicks go and what you get out of them usually is quite a bit different. What I tend to recommend is that you blend together something more like a content marketing piece, where what your intent is with the ad is really just to start that conversation, start that relationship with that person. You might give them an ebook, let them get access to a video, have a white paper that they could download, start a email autoresponder series with a mini course that deals with some of the issues that your product serves. And get somebody in discovering that they can trust you. A good example is that if you do an ad on Facebook and you link it off of your Facebook page to your website, the bounce rate, or the number of people who will go to that page and immediately leave it and go back where they came or go somewhere else, is more than 4 times the size of if they just stay on Facebook and go somewhere inside of Facebook. Facebook's really not a great place to be trying to convert a lead because it's short attention span theater. You basically have people who are not thinking of, they don't have any purchase intent when they're on Facebook. They're messing around, generally speaking. They're wasting time. Okay, so you have to be in the mindset that they're in. If you're trying to actively convert somebody whose intent is to figure out what the Kardashians did last night, you're going to have a very hard time. And meanwhile, their newsfeed is stringing along on the side, and it's, how many different ways can you possibly distract somebody? It's like trying to get my 7-year-old daughter to listen to me. It's not going to happen. So what you try to do is just get something very easy, one piece of data at most, an email address, a like, something like that done, and start that conversation with them, ideally off of the social media platform. The entire role in my mind of having Facebook, Twitter, Google+, any of these vehicles is solely and only to get somebody from those places to your website. If it's not doing that, you're probably wasting time. So, thinking through a strategy of how to do that is important. I think it's a good thing to have a social media strategy. I don't really like the idea of utilizing social media strategists, though, unless your business is really to the point where it's huge and actually really needs a strategy for it. I think that generally speaking, if it's consistent with what you're trying to do with the rest of your marketing campaign, and you are using social media to take your message and put it out there so that people come back to you, that's a good strategy. Where I would spend some time thinking about it, though, is which of the social media networks is the right one for you to be on. If you are involved in an institutional end of the business, Facebook is going to be nearly useless to you. It's just not a place where institutional, involved people are spending a lot of time. Twitter might be more useful, but I would say probably StockTwits or something like that that's like a specialty network talking about the markets and is very focused, could be the best alternative out there. There might be some of you, particularly in RIA type or advisory type businesses, where LinkedIn is truly the best place to be because of the networking aspect that it has. The best use that I have personally for LinkedIn is when I'm going to meet with somebody and do some prospecting or networking or that kind of thing, I look at their LinkedIn network before the meeting and go in with, here are the 10 people on their LinkedIn network that I want them to introduce me to. It's not social media participation. It's flat out knowing that person's Rolodex before you get there and figuring out where are the gold nuggets in their network that I can ask them to refer me to right now. That is a really effective use of LinkedIn. And if you're in an advisory or broker type role, that can really transform things. I think it's also true for educators and other people like that too. I mean, if you could go, I'm just thinking about this off the top of my head, but if you were to have an education client and you had a good student of yours that you could look through their LinkedIn network and find somebody who is also interested in options trading or futures trading, you might be able to say, hey, I'll give you a break on your next year's subscription with me if you'll introduce me to this person and they sign up. That it can be done programmatically to your entire customer list, but I think you might get a really high ROI on it by reaching out either with a phone call or an email and specifically saying, hey, what about this person? They might not really have thought about it, or they might be thinking too generally. The more specific you can be with those referrals, the better. So I think that's probably pretty good from a channels perspective, and that was at 100 miles an hour. And if you want to talk about any of those in particular, feel free to email me. Again, my email is skip@16wells.com.
Great. Thanks, Skip. I just want to ask you folks, how many of you have ever been marketers or involved in marketing for organizations that you've worked with? Just a show of hands. Okay, so there's a reasonable number of you who've been around the horn on this thing. Of those who haven't, how many of you listen to what we're talking about and saying, oh my God, this stuff is overwhelming, I don't know where to start? I'm just curious if there are just too many choices or too many options. Is there any sense of that? Because what I think is important, and I'll ask these guys to comment on it actually. If somebody is not a marketer by background, if you've been involved on the floor, or you've been involved as a trader in another fashion, or you've been more on the technical or even on the building of the technology side, what's the one thing, or where's the one place that you would recommend starting for somebody who's building a new business and really needs to kind of get their feet wet in marketing?
As it relates to public relations, I think the first thing you can start doing, or a really good way to do it, as it relates to public relations, I'm sorry?
It's your computer speaker, probably.
Is that right? I'm sorry.
Try it.
Is that better?
No. As it relates to public relations, I think one of the quickest things you can do is there's so many outlets out there right now. When I first got into public relations, if your client didn't see it on a newsstand at the airport, it wasn't worth being in. It wasn't a meaningful publication. But now there's so many outlets. There are tons of print outlets. There are tons of online outlets. There are podcasts. There are broadcasts. There are just so many outlets out there right now that I think more people give the benefit of the doubt that they're quality outlets. Like, I may not have heard of outlet XYZ, but that's on me. Clearly I should have. This outlet dominates this space, or this focuses on options trading technology. So there's so many outlets out there right now. What that means is there are a lot of places that want content. So one of those things I think you can do is start looking at, do an inventory of the different places. And maybe your first place isn't contributing an op-ed in the Wall Street Journal. It's very, very unlikely. But maybe you can go to Wall Street Technology if you're selling trading software. You're a consultant, and you have an idea of, hey, people don't understand the cloud when it comes to options trading technology. Or I have this great take on big data challenges. You can go to those. It's easy to find the contact information. Propose a contribution. Say, hey, this is here's an abstract of what I would like to contribute. It's on topic XYZ. Here are the points that I'll cover. Are you interested? If they say yes, move along. Get the timeline. You can submit, and then you have something that basically has your story, has like, and the byline or the contributed piece should probably be tied into what your service is. Whether that's trade advisory, so maybe you're offering sort of a look at a unique trading strategy, or if it's technology, it should be related to the service that you're providing. But so once you get that submitted and it runs, whether it's in a print publication or online or even a podcast, you'll have something that you can then have on your site that you can share with prospects. And that's typically something, because it's because so much is online, you can get turned around very quickly. So that's something I would recommend doing right away. And then I think also the social media is another area. Start using Twitter. Find out all the people, build the inventory of the reporters and editors, publications that are relevant to what you do. Find them on Twitter. Start following them. Start building engagement with them that way. And over time, it's a long game. It's not going to be like short-term wins. But over the long term, I think social media can be very helpful as well. And it's very simple to do. You can do it while you're watching the Bears beat the Packers.
For example.
I agree. I think it's a great thing to participate in social media, particularly if you've just started a company and you don't really have your marketing budget, overflowing your bank account yet. it's the lowest hanging fruit, the least expensive way to do it, so do it. If I had $100 marketing budget to work with, literally, I'd probably put it into Facebook ads, unless I was in the institutional space, just because I've found that you can get great engagement off of things if you just make sure that there's a point to what you're doing with that ad, that it's going somewhere where you're going to get a conversion off of it. The other thing that is super basic and has been very hard to get people to think about is on your website, you absolutely positively should have something that you are giving people that they have to give you their email address first. Ideally, in what's called a double opted-in procedure, where this is the classic where you put in the email address, it sends you an email, you click the button to confirm that's a good email, and then you get the goodie. Saying sign up for our email newsletter is basically saying, please let me spam you. People don't want to do that. But if you can take 3 of the issues that your service solves and write a well thought out piece that explains those issues and how people get into the situation where those issues are prevalent and how they can go fix that on their own, but you've already thought through that stuff and here's our very easy solution that just costs a little bit of money, that's a much better sales pitch than trying to just directly say open an account now or sign up for our email newsletter. The one thing I will say is be aware of the CAN-SPAM law rules. You cannot take every email address you've ever had an exchange with somebody and dump them into an email program and start sending out whatever you want to anybody. It violates federal law. There might not be a lot of publication of it, but you do not want to be building your list the wrong way. You want people to be signing up the right way. But that's where I would start with.
I do. Actually, building on this last conversation, if you're a small business and you've focused on or started dipping your toe in social media, Twitter and Facebook, it sounds like that's the right route. We talked about DIY. We talked about not using a strategist, but a strategy. If you're implementing your own strategy, there's probably a lot of right things that you can do. What are some of the wrong things that you can do when you're doing your own, when it comes to Facebook and Twitter?
Don't tweet pictures of yourself in a bar on the weekend, twerking.
Home-based twerking. Thumbs up.
I think that you don't want to, once you start doing it, you don't want to go dark for 3 months and do nothing. Once you're going to start the conversation, continue it, even if it's just, every few days putting one thing out there. It doesn't, I also kind of follow a 7-to-1 ratio of tweeting things that are valuable, interesting, provoking with anything that's product related. It's fine to put something out about your product, but have it be really, 1 out of every 7 or 8 posts that you do. A lot of times, I think Josh and I have done a lot of this where what you really are doing is just sharing the interesting content that has applicability to your space. It might even eventually be from your competitors, but what you're trying to do is just build the credibility and the desire that somebody would have to follow what you're saying because you're always keeping them up on whatever topic it is that you're doing.
Yeah, I agree with that. I think that's important to not be overly commercial in these messages, to show that you've thought through the issues and that there are a range of solutions that you can provide, that you can, in effect, you can provide a give and take to people as opposed to saying, we figured it all out, come buy our product and get the solution. Things change. Timeliness, at the end of the day, timeliness is one of the most valuable things. So if you can anticipate what some of the market conditions are that you could comment on and know in advance when this happens, I'm going to make it relevant to my story in this way. That's a real advantage. It's very easy to kind of have a tin ear and have the wrong response at the wrong time. So part of what you want to avoid is what seems inappropriate, to talk about bullish strategies in the down market. I mean, to, whatever the case may be, what you want to be able to do is have somebody say, hey, that's actually useful. And if it's useful and it doesn't feel like it's a self-promotion in a big way, you've got the advantage.
And I think the only thing I would add, well, two things. From a public relations...
It's you.
Feedback. Put those braces on. So they tell me. But from a... Oh, it's okay. I don't need this number. Oh, and one. All right. From a public relations perspective, I would say one is don't be desperate. Don't seem desperate, like for attention. Even if you are. So if you're looking, if you want to get in publication X, don't keep knocking and knocking and knocking on the door. Just be respectful and bring good content, and it will happen. You just don't be desperate. And the other thing I would say is don't forget about where you've had success, because you can keep having success there. So if you contribute content to a publication, whether it's print or online, what have you, when it's done, go back to the editor or the reporter you work with and say, hey, I love doing that. I'd love to do it some more. How frequently can we do this? Would you like something regular? How should we do that? A lot of these relationships can become ongoing ones, and I think too frequently people go, they get some success, and then they move on to the next thing and leave it behind. And that publication would be clearly happy. They accepted it once, they'd be very happy to accept more, most likely. So I think that's another mistake that people make is not going back to the well. And you can do that. You don't want, certain publications are not going to want it too much. But for one of our clients, we have a weekly column in Trader Planet for them. We sort of set it up, and every Tuesday morning, she gets in touch and says, hey, I'm looking forward to the next column. Send the next column. And it's just been a very successful relationship, and that's something anybody can do. And I think most publications are very open. They want content.
We got one question here. I guess we have a question here too. I guess we got time for a couple more questions. I'll do this one first. Go ahead.
Back to the social media, and maybe you can both comment on it from marketing and PR perspective. How can you avoid the downfall of the oversharing, the being too annoying? You're posting too much, and that's happened for me from a consumer perspective, where somebody is all the time posting things, and after a while you're put off by the all the time. Even if some is useful, but there's just such a...
Too many.
Yeah, just too many.
I could take that. I kind of look at it like you probably do not want to be posting on Facebook more than one, maybe two things a day. Twitter, maybe 5 or 6. And what I would really recommend is, in particular for Twitter, there's a tool out there called Buffer. It's bufferapp.com. It essentially will analyze your Twitter followers and figure out the times a day in which your followers are on Twitter. And then you can slot. You can spend 10 minutes, put your next 5 tweets in there, and then it will space them out and send them out right before your audience usually is engaging with Twitter. So it's a terrific tool. It's free. They have a paid version too, but if you are only using one account for your business, you can use it for free. And it will kind of automatically handle the spacing things out issue. I kind of think of the social media frequency issue as being one of throwing a rock in a pond. You want to let the ripples settle. You want to let people be able to see it and digest it before you throw the next rock in the pond. And that's a lot of times with clients, I end up having to tell them things by analogy like that to be able to say, it's okay that you're anxious and you want to go on the next date with that girl, but leave her alone, and let her kind of wonder if you're going to call before you do it again. And it's the same sort of thought that you want to do. Once you put something really great out there and people are all over it and engage it, let them digest it and think about that was really a good piece. Then you can come back at them again the next day, the next week, whatever, and have something else for them to chew on. But like to say, you don't want to overshare. I mean, there's a lot more value in having one really great piece a day than having 16, and even if that same great piece is in there, it's lost in the snow.
Mark, did you say there was another?
Yeah, we got one more here. They want to know about effective calls to action on a website to get users to fill out a form or sign up for a trial. It kind of goes back to what you were just saying, Skip. So give us some ideas.
Right. Well, I think we can start by picking up what Skip was saying.
Free beer.
Before. Yeah, 2 free beers is better.
2 free beers.
Right. It really has to do with something that's of value to your audience as opposed to something that's of value to you. Ideally, they're the same. But realistically, what you want to be able to do is to provide some objectivity on an issue that you have thought through, where you can provide some guidance for an audience so that they legitimately feel there's a quid pro quo. I'm going to give you my information, my value here, which is my name, my contact info, maybe answer a question or two for you in exchange for what you're offering. So if it's a product brochure, not going to happen. But if it's 3 strategies that you need in such and such changing environment in order to preserve your capital or in order to do whatever your objective is, you're going to get people who have that pain point. And some of them are going to say, okay, I'm willing to give them my name or my email address in exchange for that. Now, the challenge of that is that, again, it goes back to timeliness because there are times where certain pieces are more relevant than others. The other challenge or the other opportunity is how do you disseminate that message? It's one thing to put it on your site and let people find you through organic search. It's another thing if you're actually paying to get that message out to show how smart you are. One of the things that I always believe in is trying to do that on a performance basis where you're not paying on a per thousand, cost per thousand basis to reach a certain number of people. You're paying based upon the number of people who actually raise their hand and legitimately say, I want this piece. And there are a lot of strategies that enable you to work on that performance basis. So, again, the 2 things that are involved here are the relevance of the message to solve somebody's problem and the way in which that solution can reach an audience in a way that will not cost you money up front, but will only cost you money based on results.
2 quick things to extend that to. The first is that regardless of which channels you're utilizing in your marketing, track what's happening. Put a simple spreadsheet together. How many impressions did we get? How many people saw this? How many people clicked? How many people, what was the rate that people left? And how many people actually came out the bottom? Figure out what that funnel actually looks like for you so that you can compare what works better for my business. Email, advertising on the web, doing something performance-based. You should be able to line these things up side by side and on a data-driven basis. Presuming that most of you have spent most of your lives in some variety of trading, you should like data. If you can look at things side by side, it's the same as looking at 2 different trades and deciding which one to do. You want to know what your cost is for each channel and each sub-market that you're advertising. Whether that advertising is on Twitter or buying ads on Yahoo Finance and the other end of the spectrum. The other thing is that one thing around calls to action, which I've seen a lot, is not what should go on the button or any of those sorts of things, but a lot of times in the effort to differentiate yourself as a company, companies will create their own language to describe things that are commonly used terms in the industries, and that's fine. But when you have like a direct response landing page, which is the kind of thing that Gary and I are talking about, where you're sending somebody, especially a paid somebody, to an offer page of some sort or another, you want to use the language that as closely as possible mirrors what they search for. If what you're doing is sharp and alpha ratio adjusted risk, risk protection or something. It's like very high-end sort of inside baseball way of describing something. And the client is thinking of, protecting my portfolio. You should say protecting my portfolio. Make it simple. But there are tools out there. I mean, Google AdWords actually has a pretty good one in there where you can just put in the term that you are thinking of advertising against, and it'll show you related searches and what the volumes are in those things every month. Figure out what your prospects are searching for. One of the hidden gems on this a lot of times is your customer service email. Whether you are the customer service department in addition to being the CEO, or if you have a customer service department, taking a look at the emails that you get in from customers, both customers that are happy and ones that are really pissed. Not so much the ones in the middle, actually, but the ones who are really happy and the ones who are really pissed are where you can get some real gems in language. What is it that is their issue, their problem? How do they describe it? What are the words they use? You can pull a lot of information out of there that can be very, very useful in your marketing and exposing what those pain points are and how you can meet those needs. I really would recommend it. A lot of times that's just the forgotten part of the company where, we've got people to do that and it's not me. Flipping through those or at least making that customer service manager aware that, when you get one that really is notable, send it my way just so I can take a look at it. It'll start giving you some language ideas, before too long.
I think we're probably up against the time. Mark, are we...
No, I knew this one would go on, but I think a lot of great questions. I want to thank everybody and thank the panelists. You guys did a great job.
The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.